Good afternoon. I am Joanne Block, the Interim CEO of Mercer, and I want to extend a very warm welcome to you today to discuss the future of financial services, which is a live stream where we'll be exploring the role financial services will play in Australia's economic recovery. Today's event is being live streamed because, like most other organisations, CEDA has suspended attendance at public events. However, at this time of significant economic uncertainty, CEDA remains true to its purpose of providing platforms to inform and promote debate of critical issues, and that's why this event is being made available as a live stream. Of course, this event will be recorded, and if you want to check this out after the event and anything else that's on the CEDA agenda, please visit ceda.com.au. And there'll be a lot of information there, including a link to be able to ask some questions. So at the bottom of your video screen, you'll see a link. And if you have any questions along the way, we'll try to address as many as we can. So let's get started. And to start today's event, I would like to acknowledge that today and every day we are on Aboriginal land. Committed to recognition and reconciliation, we respect elders and support their stated aspirations. I encourage everyone participating in this live stream to consider what we can do to progress opportunity and equity for Indigenous Australians, and I thank you for the work already in this regard. But I'd love to now get started and extend a very warm welcome to all of you. Thank you for joining us, and to our fantastic speakers today. The Honourable Anna Bligh, AC, who is Chief Executive Officer of the Australian Banking Association, and Nicole Gillespie, who is KPMG Chair in Organisational Trust and Professor of Management at the University of Queensland. What we're going to do is Anna is going to make some opening comments, Nicole will make some opening comments, I'll ask them some questions, and then we'll open it up for your questions. So Anna, thank you, and over to you.
The whole problem with Zoom and mute. Thank you very much, Joanne. It's a pleasure for me to be here and to all of the participants on today's forum. We've been asked to think about the future of financial services, but looking through the framework of trust and accountability and integrity. And in that context, I thought I'd start by framing my comments using a framework developed by Deloitte that recognises that trust is multidimensional, and that in a banking context, probably the three biggest dimensions are prudential trust, that is, do I trust you to keep my money safe? Information trust, that is, do I trust you to keep my personal financial information confidential? And finally, relationship trust, do I trust you to do the right thing by me as the customer? So against that backdrop, I think it's really critical in understanding where we are right now, still in the middle of pandemic, that Australian banks came into this pandemic against two very significant backdrops. The first is 10 years of global prudential reform on the back of the global financial crisis that has seen banks around the world, including here in Australia, build their prudential strength so that Australian banks came into COVID-19 stronger and better capitalised than they have ever been. And what that means is that they had the financial capability and competence to act as shock absorbers when the external shock hit the Australian economy. Secondly, and just as importantly, if not more importantly, they came into this with the backdrop of a Royal Commission into misconduct. And that meant they came into the crisis looking at it through the lens of community expectations and customer care. The crisis, I think, has provided an opportunity for banks themselves and the public to refocus on the purpose and the purpose of banking and its critical role in the economy, particularly during a crisis. And you've seen that manifest itself in a range of assistance to customers. So customers have been offered a 6-month deferral on their loan repayments, and we've seen just over 770,000 Australians avail themselves of that opportunity. Banks have also put in place a number of things, some of them in partnership with government, to ensure the adequate supply of affordable credit, particularly to businesses and small businesses that need working capital to get through this. You've also seen banks using their data in a way that has not been available in previous economic downturns, and using that data to assist and work with government and regulators to provide them with real-time information. So using large-scale data analysis to get real-time information about what banks are seeing on spending, what's happening in particular industry sectors, and getting that has been, I think, an opportunity for government and particularly Treasury that they've just never had in a previous economic downturn. And that the availability of that has been largely driven by changed customer behaviour, and we're seeing an acceleration of those changes, particularly when it comes to the digitisation of banking. As we've seen more and more the moves to cashlessness, then banks have much more insight into what people are spending, where they're spending it, and how they're doing that. You've also seen, I think, quite a bit of innovation continuing through this period. So one of the challenges in a crisis is not to drop everything while you deal with the crisis. Banks have achieved some, I think, quite remarkable outcomes in the last 3 to 4 months, but at the same time have been working to deliver the open banking initiative, which is scheduled to start next week on the 1st of July, and they'll be in a position to do that. We've seen significant changes through the emergency powers to allow customers to use electronic signatures and video conference witnessing of documents, because while people have been quarantined and self-isolating, they've still been buying houses and having to settle properties. And that has been a very significant leap forward, I think. Banks also did things like roll debit cards out to customers who did not have a debit card. It might come as a surprise to some of your listeners that we have 500,000 Australians who still use a passbook account. And as we saw in the pandemic with merchants increasingly refusing to take cash, we were aware that there were many customers who could not shop online or pay for groceries. So we rolled out 500,000 debit cards. So they're just some examples of what some of the things which I think do demonstrate that banks came into this looking through the lens of customer care. But I do acknowledge that the crisis is not over, and the transition will pose some big challenges and opportunities. In terms of challenges, there is no such thing as an economic downturn of this magnitude without some casualties on the other side of it. And the focus and attention of banks for the next 6 to 12 months will be very squarely focused on mitigating and minimising those casualties to the greatest extent possible. But there are lots of opportunities as well. Further acceleration of digitisation of banking gives banks even richer and deeper data that they can then use to identify where customers may be getting into financial difficulty, to be able to help them sooner rather than waiting till they fall off financial cliff. That can also be used, as I said, to inform and improve the decisions of governments and regulators. But ultimately, it all means that there is a real opportunity here for not only better and faster and cheaper services for customers, but also for new initiatives like open banking to provide entirely new services that currently don't even exist, that will help customers improve their own financial well-being. But in all of those questions, there's big questions around integrity and accountability, and they all have to be worked through carefully and thoughtfully. So I think I'll leave my opening remarks there.
Thank you. Thank you, Nicole.
Thank you, Joanne, and thanks, Anna, and hello to everyone. So I'll bring a trust perspective to the conversation today. We know that trust is complex. However, there's been decades of research which shows that it has 3 key pillars. So stakeholders trust organisations like banks that demonstrate ability, integrity, and humanity. So ability is around that competence to reliably and effectively deliver goods and services and meet goals and responsibilities, like Anna said, around keeping data safe and keeping money safe as well. Integrity is around that consistently adhering to commonly accepted moral and ethical principles, such as being honest, treating customers fairly, fulfilling promises, and operating within the law. And humanity is around demonstrating care and concern for those affected by the organisation's operations, so exercising a duty of care to stakeholders beyond that profit motive. Now, the Australian banking sector has traditionally excelled at ability, to their credit. In contrast, integrity and humanity has been challenged. We've seen that through the Royal Commission and some of the opinion polls before the crisis began. Now, humanity is particularly important during the current crisis. So people have heightened uncertainty and things are less predictable, and people are very vulnerable in this context. And we're seeing this playing out with customers, going to their banks and seeking reassurance that they'll be supported through this process. And I believe the pandemic has given the sector a very strong platform to demonstrate its humanity. And as Anna said, its societal purpose around helping Australia to recover economically. Now, given the backdrop of the Royal Commission and prior trust failures in the sector, there is a real opportunity here to deeply restore trust. As the adage goes, never waste a good crisis. And to their credit, as Anna's spoken to, the banks have stepped up. There have been some strong demonstrations of humanity to customers. And I think Anna did a great job of outlining some of those, for example, the deferring and extending of loan repayments. However, research also shows that these kind of trust gains can be quickly lost. And what I see as the harder challenge going forward is for the sector to retain and shore up these trust gains as we head into the recovery. And some of those support mechanisms need to be wound back. So this will require a strategic approach, and I'll outline a couple of the key strategies that I see as particularly critical for shoring up trust through this recovery period. The first is around focusing on core purpose and long-term value creation. So the pandemic, I think, has powerfully highlighted, the alignment between long-term community interests as well as business interests. And the public and customers do have a strong expectation that financial institutions will play their role in helping the recovery, but also doing as much as possible to responsibly keep people in their homes and keep those businesses running. So this will require banks to have a disciplined long-term strategy of value creation, one that balances stakeholder interests rather than prioritising short-term returns to shareholders. And I think it will be important for banks to ensure that their reporting and metrics really support that long-term value creation. A second strategy is around understanding customers' needs and how they've shifted during the pandemic and being ready to respond with meaningful choices and tailored options that meet those needs. Now, timely, clear and responsive communication, particularly around changes, will also be important. And this will help customers to feel a sense of control, to feel supported, and it will also help to manage their expectations. Third is around prioritising and looking after the most vulnerable stakeholders. So this is important because banks will be partially judged on how they treat the most vulnerable in our community. It is seen as indicative of an organisation's character. So doing what is feasible and again responsible in keeping vulnerable people in their homes and working to engineer a soft landing for them is critical, as is ensuring humanity and compassion and thinking about how does that filter down to that frontline communication with customers. Treating customers fairly is always important for trust, and it's particularly important, I think, to recognise that what constitutes fair treatment may be somewhat different now than what it was pre-pandemic. There will be an expectation of more leniency and support. And I think one of the challenges will be managing those perceptions of fairness when some people continue to be supported and others don't. Finally, this piece around innovating responsibly with technology and doing that to enhance value to customers. So as Anna alluded to, the pandemic has accelerated technological innovation, and it will be critical for banks to play a role in responsibly stewarding this technology into society, particularly the more advanced forms, and proactively ensuring that it's deployed in a way that is trust enhancing. So together with colleagues here at the University of Queensland and also KPMG, we've been conducting a national survey of Australia's trust in advanced technology and what they expect of its management. And I can talk in more detail about that, but just some of the practices that we've shown are critical for trust include things like data security, privacy and governance, that transparency, accountability and contestability when technology is being used to make decisions, and also deploying that technology in a way that's fair, that doesn't discriminate, and is inclusive of all in the community. So look, these various trust building strategies that I've outlined, they're easy to talk about, but what is much harder is consistently putting them into practice. And I think to really seize this opportunity to restore trust, financial institutions will need to ensure that they're designed in a way that embeds and supports these strategies and that ability, integrity, and humanity. So just as you can design privacy into technology, you can also design organisations to be trustworthy. And together with KPMG, we recently produced a report called Trustworthy by Design, which provides organisations with a guide in how to achieve this. I think my time's up as well, so I'll hand it back to you, Joanne, and happy to pick up on any of these points through the discussion.
Thank you both. And just a reminder to everyone, there is a link at the bottom of your video screen if you'd like to go in through Google Docs and ask a question. So please make sure you get your questions up there, and I will try to get to as many as I can. But I do have a couple of questions for you, bringing together some remarks that both of you made, and I'll address my questions to you both. And Anna, if you might lead on the first question. Trust, you both talked about trust and the pandemic, and I think there were a couple of years of a sort of a bumpy ride. The pandemic has revealed a different character and a different involvement and engagement with customers. Anna, I believe you called the banks shock absorbers, and I think we'd all agree that without that, some of the outcomes would be far more catastrophic. A word that might be a bit dramatic, but we would experience that. And of course, Nicole, you've talked about the frameworks. It's all easy on paper, but what about the implementation? So to you both, I asked the question, post-pandemic, coming out of the pandemic and thinking about Australia's economic recovery, thinking about the global recovery, what is the role that financial institutions will play as anchors in this recovery? What do you see as the next phase? And we won't put a time on it by any stretch, but what do you think is the next phase?
Sorry, I'll go first on that, Joanne. Well, I think at the heart of the central purpose of banks is to protect the financial well-being of their customers and to ensure the effective and affordable supply of credit into the economy. And I might start with the second one first. As you come out of an economic downturn like this, it is, what you'd be looking for is businesses who have learnt more about their customers through the pandemic, have changed their business practice, who want to take on debt to expand the business, to put in place new technology that will enable them to be better protected in future or provide services differently. So I think you can see already that there are some sectors that pivoted very quickly, and the pandemic gave them opportunities to think very differently about how they worked. And you could expect that some of that will become more permanent post the pandemic, and it's critical to the health of the economy overall that banks are there and able to provide that credit flow to facilitate the expansion of economic activity. It will be equally critical, particularly given the scale of this. As I said earlier, 772,000 loan deferrals, 480,000 of those, and they're still trickling in. So we'll probably get to 500,000. 500,000 Australian mortgage holders have got their payments on hold. And it would be not only, very, very seriously difficult for those customers personally, but for the economy as a whole, if all of those customers who are still unable to pay just all fall off at the same moment. And you end up with a lot of distressed assets, those going into the property market and flooding that market, terrible hardship to a range of individuals and families. So working through how banks can responsibly and legally, within their regulatory framework, make sure they protect their prudential strength at the same time as extending arrangements for people who need them in a way that gives them the breathing space they need to recover. And then understanding that there are likely to be some customers who will not be able to recover the position they had pre-COVID, and to work with those customers carefully and thoughtfully and fairly to go through their options with them and to help them realise those options, and to take the time to get that as bespoke as it can be, tailored as much as it needs to be for each customer in the context of such large scale. So, as I said, there's so I think those two things are very much the priority, but it's equally true that the pandemic has also presented banks themselves with a real insight into changes in customer behaviour and a very rapid acceleration in the use of digital banking options. It's yet to be seen to what extent those are relied upon going forward, but I think we could reasonably forecast that for many customers who have become very familiar over the last 6 months with an app or internet banking where they may not have done it before, they're very unlikely to go back, I would have thought, to their checkbook or their branch for those basic services. So there's an opportunity here for banks to continue to invest themselves in technology and in innovation and as I've mentioned open banking before, when we look at what's happened in the United Kingdom, some of the biggest uptake by customers has been services that fintechs have provided using the open banking platform, where they can help a customer consolidate. So a customer might have a mortgage with one bank, a savings account with another, a business loan with another, a credit card with 2 other providers. They can help using open banking to completely consolidate the financial picture for a customer, and they are providing services like this and working then through with them how to best budget and secure their financial well-being. So, as I said, services that don't really exist in that form at the moment with that much ease and accuracy available in the not too distant future.
Thank you. Nicole, thank you.
So I agree, as an anchor institution, it is around that financial stability and support to help Australians to weather this economic fallout. And, from what I've read, I understand that, 2022 is supposed to be a good year, a good rebound year, but we've got sort of around 12 to 18 months of probably economic pain to get through. And I think that that's important because I guess what I'd like to put on the table is perhaps how the public and customers may see this. And I think what, I believe will be important in their minds is, this is a once in 100-year pandemic, okay? It's not something that's every day. People are very vulnerable and hurting through this. And that also that Australia is in a very strong position economically to weather this. We've had multiple reports coming out quite recently to really show that. And I think, the public will also go, well, this is a sector that has historically enjoyed very strong profits and is well capitalised. And I just think that that's important because I think there will be an expectation that the banks and other financial institutions will step forward and reconsider perhaps what is responsible lending or what is fair support just for this pandemic period. And of course, we've seen a lot of signs with that. And of course, the government and the regulators are playing a role with that. So I think that cooperation between the sector and government and regulators to really work together in thinking about those support packages and how long is it feasible and responsible to continue them for is important. Recognising that there will be a public expectation for greater leniency and support. And then I think, at that individual customer level, as I think Anna's spoken to, being really proactive, being available, being responsive to customers, really deeply understanding their unique situation and working with them to come up with meaningful solutions and options will be important. I think this, the interactions with the relationship manager at that very granular individual level will be really important as well. Getting continuity, making sure that people can come back and speak to the same person over time who really understands their context. I think that will really help people to feel supported through this process. Now, I think as Anna's alluded to, there will be casualties from this and the banks won't be able to support everyone. And I mean, just drawing from the research, one of the most consistent findings of behavioural science is this idea of fairness and that people will accept outcomes that is not what they ideally would like, but they can accept that and they can retain trust as long as they're treated fairly through the process. So the procedures are fair, they're transparent. Customers have an opportunity to have some voice and input into them. They're consistently applied. And also that people are treated with dignity and respect through the process. So, I think that will be something that will be important, and making sure that people at the front line really do have those skills to make sure that that comes through to customers. So perhaps I'll leave it and throw it back to you, Joanne, for you've got other questions.
Thank you. Thank you both. And you both talk a lot about community expectation and customer. I think I heard the word regulator in there, but I'd like to explore that a little bit further. There is no doubt that the financial services sector on the whole is very much under the regulatory spotlight. We are still working through the Royal Commission recommendations and findings. And so I'd love to explore a little bit more the balance between achieving outcomes with a community expectation standard, thinking about customers, but also thinking about culture, probity, transparency, and regulatory cost, and the expectations of the regulators. When you balance all of that out, Nicole, how do you think this is going to benefit at the end of the day customers? How do you think the regulators are going to approach this? And then Anna, we might ask you to follow up on any comments.
Yeah, so I mean, in terms of what can the financial institutions do to really shore up that probity, as you said, that transparency, the integrity piece, and the reforms around doing that. I think that one of the things that's important to recognise here is the backdrop of the Royal Commission and where things are at. So while we often talk about the need to restore trust, I think it's important to recognise that it's not just about building trust, it's also about overcoming distrust. And that's a different dynamic. When there is that lens of distrust, there is that sense of suspicion, and people pay attention, they process information in very different ways. So there is a hypersensitivity, if you like, to self-serving behaviour. And I think one of the things that would, I think a positive outcome is that we do have much stronger regulation. We do have, ASIC, and the focus there is giving people that assurance that the financial institutions will be kept in check. And I think that goes a long way to helping to manage some of that distrust and enable people to lean in a trusting way. I think one of the things that's also relevant here is that, typically to overcome distrust, you need to draw a line in the sand. We've learnt our lessons, we acknowledge what happened was wrong, and we're moving on now. And I think what's challenging for the sector is that it's hard to firmly draw that line because there are ongoing legacy issues. We're seeing in the papers on a regular basis still, there's ongoing remediation to customers, there's ongoing legal cases with ASIC that keeps it alive and in the public's mind. So I think, any swift and fair settlement to deal with those legacy issues, I think is really important. And of course, that is something that works with the regulators. That takes that sort of reputational trust legacy issue off the table, and I think enables the financial institution, the sector, to really step into this more positive space around building trust, showing their long-term value creation, supporting people in the economic recovery here. So I think in terms of some of those deep reforms, I mean, it's important to say that the banks have done a lot in this space, and I know Anna's been very integral to that. We are seeing a lot underway, but I think that cultural piece of making sure that it's really being lived in the banks, that's often the harder piece. And I think that that's something that needs ongoing attention to make sure that that culture is really aligned, that the leadership and management practice is in line with that, the metrics are supporting that trustworthy conduct. And importantly, through this pandemic, that humanity piece that's so important. How do we make sure that the banks are really, have the right processes and cultures to actually make sure that that's happening on a regular basis?
Thank you. Anna, would you like to comment?
Certainly. I think the whole regulation of the crisis, if you think about, I said, banks came into this with the backdrop of the Royal Commission, and that sort of, I think, made them really focus on community expectations and customer care. But if you think about the regulators, they came out of the Royal Commission with a very clear kind of message from the Commission, that the public expected to see them to be much more firmly on the enforcement side. They expected them to, come down much more harshly, and to have a very, very pro-enforcement, potentially litigation stand. But in fact, what the public has actually needed during the crisis has been regulators who are prepared to cooperate with the people, that the banks and financial institutions that they supervise and regulate, and to put in place a significantly more flexible and, I think Nicole used the word lenient approach to their role as regulators. If they had not been prepared to do that, it would have been much more difficult to banks to do what they've done. So at the really basic things, the ACCC, and this has not just been true in banking, but the ACCC, and anybody on the line who's experienced them will know, they are a very fierce cop on the beat in relation to collaboration and collusion and competition issues. But in fact, we could not have put together the customer relief packages if banks hadn't sat down together around the table and talked about things that normally they would be disinclined to do because they're fierce competitors, but in some cases it would have bordered on illegal for them to do it. The same is true of supermarkets and supply issues, etc. So, the ACCC and APRA and ASIC have all had to really pivot. And I think that's been an interesting post-Royal Commission. I mean, as we transition out, they will inevitably pivot back, and everybody expects that. And that's as much a part of a trusted system, I think, that at some point the public has to have trust and confidence that where regulated bodies do the wrong thing, that the law will be enforced. But I think, at the moment, responsible lending obligations is probably the best example. Some of the difficulties that I think both banks and regulators are grappling with is as we come out of this and banks are having to make decisions, for example, of extending working capital or an overdraft to a small business, banks will have to be making decisions based on some assumptions about the likelihood of that business's industry to survive or not, and about how long it might take before they can recover. So they will have to, as they look at the 6-month deferral mark and in the lead up to it, make a judgment about, is it likely, that our national borders are going to open again at some point within a reasonable period of time. To be fair to the customer, my view is banks have to be able to operate on some assumptions, such as, when the arts community is able to put on performances again, customers will actually want to go and fill those seats. And that when state borders are lifted, people will want to fly for a holiday interstate. And if some of those assumptions prove to be wrong, it is open for the customer to say, I hadn't paid for 6 months. You should have known that things were going to get worse and you shouldn't have given me that loan. You breached your responsible lending obligations because it should have been clear to you that I couldn't service that. If banks worried too much about that, if they got fixated about every possible, consequence down the track, they wouldn't lend to anyone in the current environment. And that would be devastating for the economy and for customers. So there's a bit of risk in this for everybody. The regulators, the Council of Financial Regulators met last Friday, and they issued a statement yesterday about that meeting. And they included in that a recognition that regulators through the transition are going to have to take a flexible approach that recognises the uncertainty of the economic times that we're all living in. So there is this sort of unknown. On one hand, what is fair seems very obvious, but when you're dealing with so many unknown factors about the likelihood or otherwise of a business to get back on its feet, it's not quite as clear cut as you might think. Is it fair to lend that, give that? Similarly with mortgages, is it fair to give somebody a longer deferral, which actually makes the cost of and the length of their loan, longer? is it fair to give them that and give them the breathing space, or should you require them to start, performing faster? So they're all kind of ethical questions that are having to be underpinned by good data and lots of conversations with regulators about what does good and fair look like in these extraordinarily unknowable circumstances. But I would just say, in terms of culture, on remediation, I absolutely endorse Nicole's point. That's going to be a very important point for banks when they've settled all of those things. They are currently working with various parts of the system, regulators and Treasury, to see what can be done on some of the big remediations to accelerate them. And I think I heard Nicole use the words fair and swift. When it comes to remediation, getting those two things to align is very tough. If you define fairness as every single customer gets every single thing they're entitled to down to the absolute last cent, it will not, and you have a large scale cohort, it will not happen swiftly. If you define fairness as, everybody gets something pretty close, we've used some algorithm that everybody accepts as fair, but customers have some recourse if they think it isn't, then you might be able to speed it up. So, but that would be a very big shift away from the previous requirements on the corporate sector in relation to these sorts of programs. And I just finish in terms of culture. I think one of the things that has struck me a lot in the last few months is how often I have heard bank staff say, I felt really proud to work for Westpac today. I felt really proud that I worked for CommBank. I feel really proud of what Suncorp's doing. They actually are using the word pride because they're seeing the difference that those initiatives are making. And I think when you've got your staff starting to have that feeling, then I think it's something they'll enjoy and they'll want to keep going. And I think it's a very powerful motivator and very powerful prompter for staff morale. And it's hard, I think, to get culture right when you've got a very demoralised team, which they have been over the last couple of years. So I think that's a very indefinable, but I've certainly noticed it, and it's unprompted, and that's how people they're literally kind of holding themselves high and saying, I feel proud of what we're doing for our customers.
Thank you both. And I'm going to just turn to a couple of questions from the audience. I also have a few to ask as well. There's so many things that you're both raising of such interest. But there is a good question here around regulation increasing potentially for newer market entrants, fintechs, startups, and others who I know are sort of helping in terms of the innovation that's required. And I know many financial institutions are partnering with fintechs and so on. But are we seeing a change in the barriers to entry? Are we seeing a more open environment? And how do you see the regulatory environment impacting? And Anna, maybe do you want to start with that? And then Nicole, maybe if you feel free to comment.
Sure. Well, I think fintechs themselves would have their own views on this. And unsurprisingly, I mean, when a fintech goes from being an idea in development to an entity that comes in the radar of the regulatory framework, their experience inevitably will be, oh, suddenly we've now got all these rules and regulations that are constraining us. But I think one of the challenges in the public policy space and the regulatory space is all too often, I think, the existing incumbents and legislators as well often think, well, the way to create a level playing field here is to impose the regulatory framework that the incumbents work under onto the new entrants. And I think we need to challenge ourselves sometimes to say, well, actually, if you look at what these new entrants are doing, they're actually getting to the same place with a faster mechanism. And maybe we should take some of these requirements off to allow that the level playing field can be created two ways, I suppose, is what I'm saying. So I think that's not always appropriate, but I think there are, particularly as technology is moving so quickly, the ability, with new entrants coming in. You know, for them, for example, you know, many of them having completely different serviceability assessment processes that are entirely algorithm based, and we could either impose the entire existing responsible lending requirements onto them, or you could say, well, actually, let's have a look at what they're doing. Is it working? Is it actually fairer for the customer? Does it actually get the outcome you want? And could you actually make it work both ways? But in general, and I can only talk about in talking about banking, ASIC has approved, I think it's now 8 new banking licenses in the last 14 months. They are the first new banking licenses granted in Australia since the mid-1980s. And they are all new banks. They are not subsidiaries of existing banks. They are, you know, all targeting different markets they're all online. So none of them have any legacy systems. They have no branch footprint, and they never will have. And they are going to challenge the system. And I think most of them got their license within 2 years or 18 months of applying. So I think, you know, that's pretty good evidence that there's room for new entrants. Similarly with open banking, that is a platform where I would expect to see considerable interest from companies other than banks offering financial type services.
Thank you. Thanks. And Nicole, I have a different question for you, if that's okay. And if you wanted to make any comments on innovation, new banking licenses and so on, please feel free to. But I thought there was a very good question here. Why are banks told to be more compassionate in their approach than other businesses, for example, or for the government, in terms of the government too? Will the government forego its debt? Would the government ever think about doing that sort of thing? And I thought that was an interesting question for you to tackle. I guess the implication of this question is, are banks being held to a higher standard?
Look, I think it goes back to societal purpose and supporting, you know, the role that financial institutions have in supporting the economy, you know, and this is a very unusual time in terms of the hits to the Australian economy. You know, it's the first time we've had a recession for a very long time. So I do think that that humanity piece, which is, you know, is that compassion. I mean, it is critically important for trust. I think it's critically important for all organisations. And I think the government, you know, obviously the government is a huge machinery and has many different components to it, but I would say that the government is also held to that same standard of compassion. Now, you know, organisations, you know, can deliver to that or not, but it doesn't take away from the fact that that will be part of how that they're evaluated. And I think what, you know, the key point I've really been making here is that humanity is more important in times of crisis than it is in other times. And I think that, you know, there is a real opportunity here for the banks to be viewed very, very differently. I mean, there's an opportunity here for the images and stories and what first comes to mind when people talk about Australian banks in 2 years' time to be images of the support they provided, of the businesses they saved, of how they played this critical role, and we just would not have got through this recovery without them. You know, and that can displace some of the, I guess, negative images and stories that have been quite dominant, unfortunately, you know, recently. So I do think that there's a real opportunity here, but it will require exercising that humanity. And as I said, you know, that doesn't mean stepping away from responsibility. It doesn't mean, you know, being so overly generous that actually all that you're doing is prolonging the pain and actually potentially causing more pain. It has to be done responsibly. But I do think that this is probably an area that traditionally hasn't been seen as part of the armoury of banks. And I think now there's an opportunity to really make it part of that armoury. And I think we'll put the banks and their reputation and trust on a long-term positive trajectory if they can do that.
Thank you. Anna, did you want to respond or make any comments?
I would just very quickly say, and agreeing with Nicole, that I think governments are held to that same standard. I think if you think back a couple of months before the government announced JobKeeper, and before if they had not done JobKeeper and JobSeeker, we would have unemployment and no income support. I think for probably another somewhere between 3 and 5 million Australians. And I think if they hadn't done that, the political price for them would have been one that they couldn't have survived as a government. So I think, and you've seen that from governments around the world. For the same reason, citizens look at governments and say, well, everything's going to hell in a handbasket. You guys are sitting there with a great pot of money that could make the difference, and we expect that you will do that. We elect you to keep us safe. And I think the same is true of banks. People do look at banks, as Nicole said earlier, and say, you are large, you have been profitable, we've trusted you with our money. Now that we're in pain, we expect that you will, help us where you can. I think it's at the edges. I mean, banks, I think the one other point I'd make is actually banks are very compassionate all the time to individual customers. But most of the time, most Australians are, for example, mortgages, are able to pay their mortgage or come to an arrangement with the bank about moving to interest only or something like that. Inside every bank, there is a hardship team, and they deal with people who are in the most terrible of circumstances, and they find solutions for them that go against all, the principles of profit making. But there's so few of those people most of the time that most of us don't know any of them. What is happening now is you've got 750,000 Australians who are absolutely relying on the bank and their forbearance around their financial difficulties just to keep their head above water. And I think the scale of it means that most Australians probably know someone in their family, themselves, in their workplace, who has deferred their mortgage or deferred their business loan. So that's, often the compassion that I see in banks all the time is quite invisible to the public because it's quite small. It's a handful of people who might, get significant debt waivers, things that you would never think a bank would do. But this is now of a scale where what banks do will not only be scrutinised, and rightly, but hopefully, one of the things I often hear said, a crisis reveals the truth. And if this is an opportunity for people to get a better understanding because of the numbers of people involved of what banks can and do regularly, I think that will be a very good thing.
And this is to a certain extent a follow-on question, and I've heard this asked a fair bit, and I've heard this in the commentary when we talk about the tensions around regulatory reform and the expectations. If banks become too risk averse, for example, in the area of responsible lending, are we headed for an environment where a proportion of the community may not have access to financial products or may be very limited in their ability to access, including the innovation that you spoke of earlier that has enabled people to get debit cards, that has enabled commerce to continue on without having to go into a bank. So I wonder what your perspective is on that.
Yes, I think it is a very finely balanced judgment at the moment for banks about how to fairly discharge their responsible lending obligations. So, one of the things the government did was put in place a small business lending guarantee scheme where they guarantee 50% of the loan. And that was designed by the government specifically, not because they thought banks didn't have the money they needed to get out the door, but was very much designed to give banks some comfort about going further up the risk curve than they normally would. So, in a normal world, business as usual, this time last year, if you as a business had not paid your repayments for 6 months, there is no circumstances, I think, in which the bank would have extended you more credit. But this is a very unusual set of circumstances. You haven't paid your repayments because you've entered into a deferral period, which was because government decisions shut your business down. Now, it wasn't a failure of your business acumen or a loss of appetite for your product in the economy. Governments closed your business down. And so, banks can't really apply some of the things that they would normally apply. So looking at what they can apply is challenging. And Yes, I absolutely agree. We don't want an overly cautious banking sector coming out of coming out of COVID. The economic recovery will need to be fueled by access to efficiently delivered and affordable credit, and actually making judgments about how far up the risk curve you go on that's the art of being a banker. But it does require the regulators, and those discussions are happening, to understand the unknowables that banks are dealing with and the sorts of judgments that they will be called on to make. And that's inevitably some of the assumptions that seemed like the right assumption in August this year, by May next year will be proven not to have been realised. And that's going to be the difficulty.
Yeah, no, I think that's right. Everything is moving at such a crazy pace.
Yeah.
And Nicole, with that in mind, one perhaps last question before we look at any others. So if anyone has any other questions, we're trying to deal with them where we can. Nicole, the shareholder value, bringing together the triumvirate between customers, colleagues and shareholders in this very tricky environment. How do you look at what's your perception of value creation and the role of accountability and trust in bringing together the three, and not only the three, there are more than three key stakeholders in the mix, but in terms of the customer, employee and shareholder context? What are your thoughts around that?
Yeah, so look, I mean, this is why I think that long-term value creation is part of the answer here, because, everyone benefits, I think, from that long-term focus, particularly given the current sort of economic environment and vulnerabilities. So, I mean, there is this need to balance the roles and responsibilities to various different stakeholders. And I think what's been really helpful through this is, we have seen increasingly this shift towards what some people are calling stakeholder capitalism, away from perhaps that traditional focus of shareholder primacy. And that's happening internationally, that's happening in Australia. And I think that that's very appropriate, and from a trust perspective is really important. I think specifically, for shareholders of the financial institutions, I mean, I think there's two different types, of course. There's the institutional investors who I think by and large, my understanding is that they're focused on the long term. That's also aligned with their interests. I think it's harder with perhaps some of the retail investors, and they're probably more diversified in the sense that, on one extreme, there probably are some retirees and people who are very dependent and quite vulnerable to dividends not being paid and etc. So, but I think also there are some retail investors who are also quite happy with the longer term focus. And I guess it comes back to a bit of this Team Australia. I do think that and that's something we can all be proud of, is that we are bounding together here in trying to tackle this and get us through. And I do think that, to some extent, all stakeholders need to play a role in that. And that includes investors who go, we understand that the banks can't pay a dividend now. We respect that. We know what they're trying to do with that and why it's difficult for them. They're making the right call for Australia overall. Now, I think that sort of stepping up to that sort of common purpose and that sort of sense of Team Australia is important here. I think it's hard for those particularly vulnerable investors. I think for employees, and this is, part of it, they also will have strong expectations. And we know from public opinion polls that have been happening through the pandemic that employees expect to be cared for and looked after, and as much as possible, those jobs retained. So it's a similar sort of, if you like, dynamic there as what we're seeing with customers, who want to be supported through this. And I think particularly with some of those technological innovations where people can do more with less, as in less people, that will need to be very carefully managed, particularly through this pandemic period. But again, I think employees are typically on board with that longer term focus as well. So I think there's good alignment in a pandemic. The crises do, I think, help to bring this alignment and that cooperation to the fore.
Thank you. And we are very fast coming to the close of our session today. So I wanted to just make some closing comments, but most importantly to thank you both, Anna and Nicole, for sharing some of your thoughts and views on what is clearly becoming quite a complex matter. Well, it has always been. I think, Anna, you've put the framework in place, which is a huge amount of regulatory concern, questions, higher community expectations prior to the pandemic, but coming into the pandemic, that has in fact enabled banks to be, and I love the word shock absorbers, and to be able to deliver very strong services to their customers to enable them to get through what is going to be quite a long-standing process, and to support and help their customers despite everything that was going on before and will continue after. Nicole, I think you've talked about the trust framework and humanity, and you've both talked about vulnerable customers, you've both talked about innovation, you've both talked about the role financial institutions play in our community and our society, and that that role, whilst dented, there are issues with trust. We are still rebuilding and restoring trust. There are opportunities, particularly through this pandemic, to move forward, to earn that trust, and to do so at the level that the community expects. I think we're all trying to figure out exactly what that looks like, and we're getting, it's a balancing act because you've got the regulatory spotlight, you've got your community expectations, and then you've got your customers living and breathing life as they know it, plus shareholders, colleagues, and so many other stakeholders. So I think it's been a really, really interesting conversation today. We've had some great questions from the audience. And so I wanted to thank you both for your time, for your insights, and for the conversation. And I want to thank CEDA for bringing this together. It's a hot topic, and it's a topic that I'm sure we will continue to talk about as we track through the pandemic, the economy, the crisis that will continue for some time yet. But for all those customers that we need to continue to serve. So thank you both, and thank you to the audience for joining us today.